Good evening, guys. We have done with one chapter of accountancy and financial management, that is financial accounting. Now we start with the new subject. This subject originally in the old syllabus was in SYBCom. Couple of years back they have shifted this in SYBCom. The name of the subject Introduction to Management Accounting. As far as level of accounts is concerned, you can say it's a very scoring subject. There are no journal entries, no ledger accounts. What you are supposed to do is just calculations. But whatever you are going to do in this subject, well, it's very simple, but it is very much applicable in practical life also. Whatever we are going to do in this subject, everything is very much applicable in practical life. Okay? Again, full practical. There is no theory chapter. One small theory chapter that's very simple, hardly few pages are there, that I've already given you all. Okay? Now we take the first practical chapter, that is study of financial statements. Study of financial statements. Isme there are different parts, where the first part is vertical financial statements. Now when I say financial statements, what do you mean by financial statement? Financial statement you all have studied right from your SYBCom, SYBCom last year also you all have studied. Financial statement is nothing but your trading P&L and balance sheet. The statement of accounts prepared at the end of the year, they are your financial statements. Trading, P&L, manufacturing account, what you all did last year, and balance sheet. Now what you are supposed to do here is, you are supposed to prepare the same statements but in a vertical format. That means not in the T format, debit credit. It is vertical financial statement. Statement is not an account, so there is no debit credit in the statement. Okay? You have to put it in the vertical format instead of horizontal T format of debit credit or asset and liabilities. Now here when I say vertical financial statement, as I told you, it's in two parts. The trading P&L and balance sheet. So trading and P&L is one part, which we call it as vertical income statement, and then the next part, balance sheet, which we call it as vertical balance sheet. Now we will be studying both the parts separately. What I am today starting is, first we will do vertical balance sheet, then we will take vertical income statement, and then we will take combination. Uske baad there's another part, common size comparative trend, that we'll see later on. But today what I am starting is balance sheet. And what I am doing today is, I am not doing any sum, I am just discussing the full balance sheet ka format with you all. Understand, because what we are going to do for the next 2 to 3 days is based on what I am going to explain you all today. So today we are just discussing the format of vertical balance sheet, and that we are going to do for the next 3-4 days. I'll first do only balance sheet, then we'll do only income statement, and then we will do combination. Okay? I have put the pro forma pictures on the group. You have to copy that, but I'll explain you what all it includes. Okay? Now, vertical balance sheet. What you will do is, the name of the chapter is Study of Financial Statement. First part, vertical financial statement, and usme we are just studying balance sheet. So balance sheet of dash as on dash. Just a hypothetical name. If you just leave it like that, we will fill up the format. Now see. Your normal balance sheet, which we call it as T, is left side liability and right side asset. Here, this is vertically, it goes one below the other. So what you will do first, you prepare 3 sides of your notebook, prepare 3 sides, particulars, triple column of amount, particulars 3 columns of amount, you will prepare of 3 sides. Normal balance sheet is in 2 parts, liability and assets. Yahan pe in this chapter, your balance sheet is in 2 parts, sources of funds and application of funds. Instead of assets and liabilities, sources of funds, application of funds. Sources means from where you are getting money. Sources means from where you are getting money, and application means the money what you have got, where you have put. Sources means from where you are getting money, and application means the money what you got, where you have put it. First, it has to start with sources. Okay? So your main heading will be capital block letters main, sources of funds. Okay? first main heading will be sources of funds, from where you get money. Now when I say you're getting money, there are only two ways, there are only two sources. One is the money which belongs to you. One is the money which belongs to you, and second, the money which you have borrowed. Either it has to be your own money or it has to be the money which you have borrowed. Either it has to be your own money or the money which you have borrowed. So this will be in two parts. First part will be your own money. So we put it as Roman 1. We call it as proprietor, that means another name for owner. Proprietors funds, or we call it as owners funds, or we call it as shareholders funds. Okay? Proprietors funds, owners funds, or shareholders funds. Now listen, what we are going to study in this chapter, majority will be from a company point of view. What we are going to study not only in this chapter but mostly 90% of the chapter will be from company's point of view. Now, balance sheet normal, how we start? We start with capital. Now this is for a company. So we will have capital, but not the basic capital what you have studied in FYJC, SYBCom and SYBCom. This is for a company. You all must have studied in OC, in SYJC, and also in commerce you all must have studied. When you form a company to raise finance, company issues shares. So for the company, capital is nothing but share capital. When you start a company, people like you and me, we apply as owners to the company. If our application is successful, the company allots us shares, we get shares, and we become part owners of the company. So that is nothing but a part of your owners funds. So when I say proprietors, owners or shareholders, company ke liye shareholders are the owners only and they themselves are the proprietors. Remember, for a company, management is in the hands of director, but ownership lies with the shareholders or proprietor. So the money which they give to form the company, that is called as capital, but it is for a company, so we call it as share capital. So it is nothing but the money invested by the owners, that is shareholders, which we call it as share capital. So यहाँ पे the first heading is share capital. Okay, first heading is share capital. Now share capital is further divided in two parts. Share capital is further divided in two parts. One is equity share capital and second preference share capital. One is equity share capital and the next is preference. Now see the difference between the two. When I say equity and preference, you will study next year in TY in detail. Equity means money belonging to the original shareholders, and preference share capital is money belonging to the preference shareholders. Difference between the two. The reason one side it is called as preference share capital and the other side it is called as equity, यहाँ पे there are two preferences. Preference shareholder have two preferences over equity shareholder. They are, first, equity shareholders do not get a fixed rate of dividend. How we do? When we put money in bank, we get interest. Same way on share, you all know that. We get income in the form of dividend. So shareholders get dividend. If you are an equity shareholder, your dividend ka rate is not fixed. You may get a high rate, you may get a low rate, you may not get dividend. But in preference share capital, the rate of dividend is fixed. So one preference which the preference shareholder have against equities, they get a fixed rate of dividend. Second, when the company goes into liquidation, when the company closes, preference shareholder get money first. After the account of preference shareholder is settled, then the equity shareholder get their money. Preference shareholder get the money first. After their account is settled, then equity shareholder get their money. So that is the two difference between equity and preference shares. Two main reasons. Preference shareholders get a fixed rate of dividend. Equity shareholders ka rate keeps on fluctuating. They may get a high rate, they may get a low rate, and in case of liquidation, when the company closes, preference shareholders get their money first. After their account is settled, then the equity shareholders get. So share capital will be in two parts, that is preference share capital and equity share capital. Preference share capital and equity. See, if there is only one in the sum, you can straight away put it in the second column. But if both are there, you put the amounts in the first column and dono ka total in the second column. Put the amounts in the first column and take the total in the second column. Okay? So preference share, equity share capital ka total is your share capital. Now what is the main heading? Proprietors funds, owners funds or shareholders fund. That includes three things. First, share capital, what we wrote. To this we add reserves and surpluses. To this we add reserves and surpluses. Now listen, what are your reserves and surpluses? Reserves and surpluses are nothing but they are the profits kept aside or accumulated. They are the profits kept aside or accumulated either for a specific purpose or for a general purpose. Surplus money created by the company which is kept aside as a reserve is called as reserve and surpluses. It may be for a general purpose, no specific purpose, or it can be for a specific purpose. Examples: general reserve, capital reserve, capital redemption reserve, securities premium, profit and loss, reserve fund, sinking fund. There are different types of reserves. In TY, you all are going to do in detail. Right now you have to just remember the items and basic meaning. Reserve and surplus means money kept aside in the form of reserves or profits either for a specific purpose or for a general purpose. Now see, what I am doing now, I am just putting the main headings. There is a list which the picture has been already sent in the group. If you see reserve, now what I am giving there: capital redemption reserve, capital reserve, revaluation reserve, general reserve, reserve fund, profit and loss, dividend equalization reserve. All these are your types of reserve. Each reserve has a different meaning. As far as your SYBAF syllabus is concerned, you are not supposed to go in that because this is from a company's point of view and this is not as per Companies Act. It is just an informal presentation. We are doing for a company only, but this is not a legal format. Legal format you all are going to study next year when you all come in TY. Okay? So you are just supposed to know that these are the examples of reserves. Again I repeat, reserves means money kept aside for specific purpose. Okay? See the list is given there. You can add there in that security premium. Security premium is also reserve. It's written there, etc., etc. So security premium is also reserve. So what you have to do? Reserves and surpluses you will add it to your share capital. If you see the format, crosses you will put it in the first column against each reserve and the total you will take it in the second column. Okay? So this is nothing but the total of your reserves. Now share capital plus reserve, take the grand total. Share capital plus reserve, take the grand total. Clear? So this is share capital. To that we add reserves. Profits, reserves kept aside for a specific or a general purpose. The list is given there in your notebook. Now, what I want is proprietors fund. So what I do? From this, I will deduct something called as miscellaneous expenditure. I will deduct something called as miscellaneous expenditure. Brackets we will be right there to the extent not written off. Brackets may be right there to the extent not written off. Now listen, to the extent not written off matlab the part which is written off, it is an expense which goes in P&L, and the part which is not written off, it remains in balance sheet. This is nothing but fictitious asset. If you'll recollect last year SYBCom, SYBAF, you all had deferred revenue expenditure. Deferred revenue expenditure is a part of miscellaneous expenditure. Deferred revenue expenditure is a part of miscellaneous expenditure. Okay? Now see, what all comes in this? You incur some expenses. It may not result in acquisition of asset, but benefit you may get for more years. That is one example of fictitious. It includes deferred expenditure like deferred advertisement expenditures, preliminary expenses. You start a new company, you incur some expense on formation, documentation and all that. That is a part of miscellaneous. When I say documentation, matlab printing of forms, not buying the company. When you form the legal documents like you want to issue shares, printing of share forms and all that, these expenses do not result in acquisition of an asset, so they become a part of miscellaneous expenditure. See the list I have given there. Preliminary expenses. Then when you issue shares or debentures, you issue it either at par, you will have done in SYJC, par, premium or discount. Par means same value, premium means higher value, and discount means lower value. So if you issue say 10 rupee ka share for a value of 9, 1 rupee is your loss. So that 1 rupee becomes discount on issue of shares or debentures. If you issue debentures, that comes under the category miscellaneous expenditure. So preliminary expenses, discount on issue of shares and debentures, share issue expenses. When you issue shares, some expenses you have to appoint agents, you have to give them commission. That is also given separately, underwriting commission. It is also part of share issue expenses. Brokerage that is given to them. Then debit balance of P&L. See, one P&L, if you see it has come in reserves, that P&L matlab profit what created. What is the profit created? That is your P&L. But it is not necessary that every year company will make profit only. It's a business, you may suffer losses. So in case there is a continuous loss, in case there is an accumulated loss, then that loss will be a part of miscellaneous expenditure. So preliminary expenses, deferred expenses, discount on issue of shares and debentures, underwriting commission, debit balance of P&L, all that come as a part of miscellaneous expenditure. Expenses which are to be written off in the future, they are not your assets. Okay? So what you do? Those you put it in the first column, take the total in the second column. Now listen, share capital plus reserve, this is the total, this minus this, take the answer outside, that becomes your proprietor's funds. Take the answer outside, that becomes your first main heading ka answer, that is proprietor's funds. So proprietor's funds or owner's funds or shareholder fund means share capital plus reserves minus miscellaneous expenditure. So this is the first. See, today we have to just understand the format. Just understand 60 to 70% today. Automatically in the next two classes the remaining 30 to 40% will be done. Today I am just explaining the format. Next time we will do actually the proper sum. Okay? Now what I told you, first part, sources of fund. Sources means from where you got the money. First, your own money. Second, the money which we borrowed. So the second part will be, which we call it as borrowed funds, or we call it as loan funds, or we call it as own funds. Okay? Borrowed funds, loan funds, or owed funds. This is called as owners or own fund. This is borrowed funds, loan funds, or owed funds. Now when I say borrowed funds, borrowed funds are in two parts. Borrowed funds are in two parts. One which is secured and the other which is unsecured. One which is secured and the other which is unsecured. Now when I say secured, you have done in piecemeal class samjhna, end mein, your liability is secured against an asset, that is called as secured loan. When you take a loan from somebody and you give an asset against security, that is called as secured loan. Taking loan from banks, financial institutions, they will not give a loan like that only. And today if you issue debentures also are mostly secured. Debentures are like share capital. It is a type of loan. So when I issue shares, it becomes a part of owner's fund, share capital. But when I issue debentures, it is like a loan. So that becomes a part of borrowed funds. And in case of absence of information, the debentures are always treated as secured. Okay? So two parts. First, secured loans. Okay? What you will do is see the items which is given there. Bank loan, I've given here. Bank loan, debentures, mortgage loans, or any other loan which are secured. Any loan against which there is a security, that is called as secured loan. You will put the items in the first column and the total in the second column. I'm just explaining you all the heads, and in that what items comes. Complete list, it has come in your WhatsApp group. Okay? Now second is what? Unsecured loan. So after secured, next is unsecured loans. Okay? Unsecured में what will happen? Any loan which you have taken, but against which there is no security given. Any loan which you have taken against which no security is given, that is called as unsecured. A friendly loan taken from a staff of the company or director of the company, unsecured. Or you issue any security like public deposits, fixed deposits, not bank wala. Company can issue fixed deposits where the rate of interest is higher, but it is unsecured. So any loan taken by a company against which security is not given is called as unsecured loan. See the list I have given there. Loan of friends and relative directors. Then you have public deposits, fixed deposits, any other loans which is not secured. All these are examples given there in the list. Okay? So that will come in the first column. Secured loan ka total, second column. Unsecured loan ka total, second column. And the total of the three, that becomes your borrowed funds. So this is my owner's funds, this is my borrowed funds, and the total of the two, that will be my balance sheet total, which we call it as capital employed, or it is also called as total funds employed. It is called as capital employed, or it is also called as total funds employed, and put in brackets 1 plus 2, and that's your total. Getting it? So see, this is half the balance sheet. First part, sources of funds, from where you are getting the money. Usme the first part, owners, खुद का पैसा, that is further in three parts. Share capital plus reserves minus fictitious. That gives me owner's funds. Second part, borrowed funds. Borrowed funds further in two parts. Secured loan, unsecured loan. Loan against which a security is given, that is called as secured loan. And loan against which security is not there, that is called as unsecured loan. Secured loan plus unsecured loan gives you total borrowed funds. So, owner's funds plus borrowed funds gives me my balance sheet ka total, which we call it as capital employed or total funds employed. Capital employed is a more common word. You can also call it as total funds employed. Got it? So this is my total sources from where I got the money. Now second half of the balance sheet, where I utilized, that is called as application. Sources means from where I am getting, application means where I utilize. Now see, this is not debit credit, so you have to just continue below. I don't have space, so I am continuing on the next slide. You all can continue on the same page only. Okay, you can see the format which is in the WhatsApp group. Application of funds. Application of funds, that means where money is utilized. Application of funds, that means where money is utilized. Where? three parts. First, fixed assets. First is fixed assets. Now when I say fixed assets, you all know that you all have done since SYBC. Any asset which is used for a longer purpose, any asset which is used for a longer purpose, longer duration, is called as a fixed asset. Any asset which is used for a longer purpose is called as fixed asset. Example, it's in two parts, tangible, intangible. You don't need a classification here. Land, building, furniture, computer, laptops, plant, machinery, typewriters, all that comes under the heading fixed assets. Remember, you are done in SYBC also, na? So all assets which are either tangible or intangible, used for a business for a longer period of time, are called as fixed assets. Land, building, plant, machinery, furniture, typewriter, calculators, laptop, computers, all comes in that. Light fittings, air conditioners, all are a part of your fixed assets. Now if in the question they give you depreciation, you will put it in the first column, deduct depre and take the total in the second column. And if depre is not given, you will straight away put the items in the second column. You will straight away put the items in the second column and the total in the third column. So the first utilization is nothing but fixed assets. See, I have given you goodwill, patent, copyright, trademark, that is intangible. Land, building, plant, machinery, furniture, computers, typewriters, laptops, everything, etc. There are many items. See, the list what I have sent you on the group, they are just a few items. There are many items in practical life you can easily make out from the nature of the item. Okay? So the first application was fixed asset. Second is nothing but investment. Second is investments, and this is nothing but, you can write here, long-term investment. We can write only investment also, but we'll specify long-term because it's only when investment is given, it is always treated as long-term. Now investment means the money which you have kept for a longer period. Investment is the money which you have kept, and if you keep for a longer period, it is called as long-term investment. Now see, there is no legal definition of long-term and short-term, but normally you know what is mentioned by the financial analyst, and it's a general trend. Any money if you invest for a period of 1 year or less, it is called as short-term, and in excess of 1 year, it is called as long-term. I put money in bank for 6 months, it is short-term investments. I put money in FD in a bank for 2 years, it becomes a long-term investment. I invest in shares, I'll say I want the money after 1 or 2 years, long-term. I want money after 5 years, long-term. So any investment what you make where the amount is blocked for a period of more than 1 year, that becomes your long-term investment. It can be investment in shares, investment in debentures, investment in government securities, or even investment in property. Remember, today if I buy a property for my business use, it is a fixed asset. Today if I buy a property for business use, it is called as a fixed asset. But today if I buy a property to be given on rent, then it becomes a long-term investment. Today if I buy a property which I use it for my own business, then it is fixed asset. But if I buy to give it on rent, then it becomes long-term investment. Okay? Examples are given there: investment in shares, debentures, properties, bonds and debentures, fixed deposits, any other long-term investment. Even government security is long-term. Okay? So all the items will come in the second column and the total of that in the third column. Next, third and the last heading, that is working capital. You will also have a separate chapter of working capital. What is working capital? Working capital is third application. Working capital is nothing but it is a short-term source of finance. To do your basic day-to-day business activity, you need some finance. Correct? You have to pay salary to your staff, you have to buy goods, then you will get money, but again you have to incur some expenses. So certain amount of money is required in business at any given point of time. certain amount of money is required in business for any given point of time, that is called as working capital. The funds which is blocked for conducting your day-to-day business activity, it keeps on fluctuating every day. Therefore, it is a short-term source of finance. So working capital is nothing but a short-term source of finance from which you incur your day-to-day business activities ka funding. It's in two parts. Working capital definition is, first what you need is current assets, which you also call it as current assets, loans and advances. Now see, which commonly we call it as current assets. What are current assets? Current assets are the assets which are short-term in nature. They keep on fluctuating every day. Fixed assets are long-term. Current assets are the assets which keeps on changing every day. They are also called as current assets, loans and advances. Example, cash. Today you have 10,000 cash. Money will come, money will go, come, go, come, go, come, go. Amount keeps on changing, current asset. Bank balance. You keep on receiving checks, you keep on paying checks. Money keeps on fluctuating on a daily basis, current asset. Stock. Today you buy goods, stock goes up. Sell goods, stock reduces. Keeps on changing, current asset. Debtors. I sell goods, they pay me. Again sell goods, again they pay me. Keeps on changing, current assets. Prepaid expense keeps on changing, current assets. Bills receivable, current assets. Any prepaid expense, advance income tax, all these are current assets. So assets which keep on changing on a regular basis, they are called as your current assets, loans and advance. See the example what I given. Cash, bank, stock, advance tax, bill receivable, income receivable. I'm supposed to get any income from somebody, that is also like debtors. It is a part of your current assets. Okay? उस next page पे देखो, short term investments. See here. Second part was long term. I invested for a period of more than 1 year. But if I invest somewhere for say temporary period, 2 months, 3 months, 4 months, 6 months, then that is called as a part of short term investment. So any investment made for a higher period is long term, and any investments made for a lower period, less than 1 year, is short term. So short term investments is a part of current asset. Now what you will do? All your current assets put in the first column, total in the second column. So second column ka total is your current assets. Now what I want? Working capital. Working capital is nothing but the difference between your current assets and current liabilities. Difference between your current assets and current liabilities. What are current liabilities? Liabilities which are short term in nature, usually paid within a period of less than 1 year. Liabilities which are short term in nature, usually paid within a period of less than 1 year. Creditors, bills payable, outstanding expenses, tax payable, provision for taxation, all these are your current liabilities. When I pay in advance, it's a current asset. When I receive in advance, it's a liability. So income received in advance is also a part of current liability. See the items there. Bank overdraft, creditors, bills payable, outstanding expense, provision for taxation, short-term loans, all these are your part of current liabilities. Got it? So see what you will do. Current liabilities, you will put it in the first column. Liabilities paid within less than 1 year, current liabilities. Liability paid for more than 1 year is a part of your borrowed funds. So this is long term, this is short term. Okay? Second column mein, you will show the total of current liabilities and current assets minus current liability. This final figure here is your working capital. This final figure here is your working capital. So this plus this plus this. Fixed assets plus long-term investments plus working capital gives you your balance sheet ka total. What we wrote here? Capital employed, same thing we have to write. This is your capital employed, or it is also called as total funds employed. Capital employed or total funds employed. ठीक है, remember it is balance sheet. This will be 1 plus 2 plus 3. Balance sheet है. How we prepare normal balance sheet? Asset liability has to be same way यहाँ पे sources and application has to be the same. It is balance sheet, sources and application has to be the same. ठीक है? I'll brush up everything again. Vertical balance sheet is what we are doing today. Discussion of pro forma divided in two parts. One is sources of funds. Second, application. Sources means from where you are getting money. Application means the money what you have got, where you have utilized. Sources is divided in two parts. Proprietors funds, borrowed funds. Proprietors funds further in three parts. Share capital plus reserves minus miscellaneous expenditure. Share capital invested by owners. Reserves, profits accumulated or money kept aside for specific or general purpose. Fictitious asset is miscellaneous expenditure. Expenditure incurred, the benefit will be recovered later stage, so it has to be written off. So that gives you my owners funds, which we also call it as shareholders funds or proprietors funds. Second, borrowed fund, which you borrow. That is further in two parts: secured loan, unsecured loan. Loan where a security is given, that is secured loan, and where there is no security, unsecured. Secured plus unsecured gives you borrowed funds. Total of borrowed funds plus proprietors funds gives you my total sources, which we call it as capital fund or total funds employed. Whatever I have received, now same I have to invest. Where I invest? First, fixed assets. Second, long-term investments. Third, working capital. Working capital is nothing but the difference between current assets and current liability. Listen to the video carefully, did not go in detail. See the picture what I put on the group, and please copy down the picture what I put on the group. Okay? And if you see, there are three important points which I have kept. I am not explaining right now. When we come to the actual sum, when the point comes in the actual sum, that time I will show you what is to be done. Okay? So today I am not doing any sum. We have just discussed the format. Next 3 to 4 days we will be doing sums only based on balance sheet. Okay? So that's it. I am stopping here. We'll continue tomorrow or next time whenever I do it. Okay? That's it. Take care, guys.